As per the MSME Pulse report, if you look at it, there is a 16% growth on a CAGR basis. Has there been any fundamentally this segment has changed in terms of the way the growth is coming in profitably? So would like to take your views on that.
What you are seeing now is the outcome of seeds that were sown many years ago. The risk is typically granular, so it allows you the ability of taking a slightly larger risk without a disproportionate impact if something goes wrong.
But what are the tools which you see would really, in terms of help in enabling it and taking it to the next level?
When you give them pre-approved offers, they don't want to get into an hassle of, again giving the documentation, etc. But when you show them that green channel, you do those pre-approvals because you have a lot of account aggregator data, etc. That nudges them and that reminds them ki they can go for a loan.
Welcome to the next series of CIBIL Sandesh podcast. Today we will be discussing about the MSME segment, how it has grown in the Indian market profitably, and we will also cover the MSME Pulse report, which has been recently launched as a joint initiative between CIBIL and TransUnion CIBIL. We will cover some of those valuable insight and take the inputs from our esteemed guest. So quickly getting into this, I would like to introduce our esteemed guest, Mr. Sanjay D'Souza. He is heading the MSME business at HDFC Bank. He's the group head. I'm joined with my esteemed guest, Ms. Zeenat from L&T Finance. She's the chief risk officer there. Yeah. So my first question is to Mr. Sanjay. As per the MSME Pulse report, if you look at it, there is a 16% growth on a CAGR basis. Would like to understand what is actually driving this resilience, and has there been any fundamentally this segment has changed in terms of the way the growth is coming in profitably? So would like to take your views on that.
Sure, thank you. Let me start by saying this set up a context for this growth. What you are seeing now is the outcome of seeds that were sown many years ago. And to start with, you have to commend the government of India for having come out with a beautiful architecture of Jandan, Aadhaar and Mobile long back. Then we had DPIs through GST, through account aggregator. These initiatives were the one which was sowed much earlier, which you're not seeing in the limelight today. Second thing you must realize, when you're lending to MSMEs, the risk is typically granular, so it allows you the ability of taking a slightly larger risk without a disproportionate impact if something goes wrong. Next, you have to recollect that the mindset of Indians, which is very conservative, still prevails. Okay, they don't want loan for the sake of loan. They largely look at loans after they have given enough returns to themselves, their friends, their family, and everyone who invested in their business. You must know this another root of Indian thinking. In business, I want to take money home, whether it is through tax planning measures or whatever you have. Therefore, despite of all of this, you find these customers extremely agile and they are moved to customer centricity. Therefore, you have seen this growth magnifying in a very nice way. Added to that, you've seen banking and finance becoming so simple to them now compared to what it was a decade back. These has led to a significant change in the way the growth took place. Now, if you look at credit growth in the country, MSME growth has always been above it. Okay? And this is the beauty of this segment. Despite all the ups and downs with COVID coming in and out, this segment has been very resilient. Now look at it the other way. In recent years, over the last 5-6 years, the government has come out with a lot of guarantee schemes which have led to lenders who were on the edge jumping in. Look at another initiative the government of India took. They asked all MSMEs to register and get Udyam registration. You saw propensity of industries moved, and the first page of your report very clearly says the number of Udyam registered entities has increased significantly.
Yes.
Then you had banks being extremely transparent in displaying all charges in their website as well as sanction letter. That gave greater transparency and confidence to customers to avail funding. These are the elements that significantly helped in the way you see MSME growth. To top it all, you found a differential way that the entities were looked at in terms of ask for documentation or the way the banks and institutions turned around those documents and came with an approval. These things have led to a significant spike, if I may say so, compared to our past in the field of MSME lending. What has really changed in the way the asset portfolios have shown improvement is largely banks were typically fixated on collaterals and relationship banking. That has moved out, or rather has been topped up now by the element of people looking at data and looking at cash flows. Earlier, banks were typically looking at DPDs when they monitored, and that too on a monthly basis or quarterly basis. That has changed to as much as real time as possible because of public infrastructure which has come in place and also information coming on the tips on a daily basis. From daily DPD, you are moving to analysis of their banking, moving to analysis of their debtors, creditors, their GSTs. These all elements coming in play have led eventually on the composite basis, you find the portfolios looking far more healthier for every lender.
My next question is to Ms. Zeenat. If you look at again the MSME Pulse report, we find that almost 25% of the new origination is, in value terms, is coming from NBFC and 40% in volume. That's like really a big one, right? How do you see that? What are the things which is resulting in the NBFC participation, and more importantly, how this is basically spanning out in terms of the customer's choice and even the product changes which are happening? How do you see that from the NBFC lens?
With my experience in banking and NBFC, who better than to answer this question? Because I worked on the other side and handled MSME very closely from a bank perspective, and now with L&T Finance looking at from the NBFC perspective. I think I'll divide the MSMEs in 2-3 parts. First one is the micro enterprises, which are like too small, too fragile, too vulnerable, and the most non-penetrated section of the MSMEs where generally banks also don't go. They would generally go to some small finance company or some small patpedi kind of a thing, or they would go to a local money lender and borrow. So I think NBFCs have become capable and they have cracked this segment through assessed income, etc. And because of our reach in rural, I think reach has played a large role where as an NBFC we are able to crack that complete micro segments, be it through micro lab or be it through micro enterprise, which is an unsecured loans to the micro enterprise. I think these two things have, and hence you see the volumes are higher than the value contribution. That's the first piece. When we come to SME enterprises, I think SMEs, whenever I have met lot of SMEs are more sensitive towards the speed and the journey, seamless journey. They are ready to compromise, pay a bit higher pricing. They are ready, to some more scrutiny, a little more, touch points with them. However, when you give them a speed, I think that has made a lot of difference for MSME. So when I used to meet MSME customers, I got one pulse where they used to say it's the opportunity which matters. So when I have an opportunity and you come and fund me, that is what we want. And I think if you look at L&T Finance, if I see how we have able to penetrate this market very well, is because of our SME Cyclops. So when we look at, whether it is customers' bureau data, whether it is customers' payment data, or whether customers' geospatial data, whether the customer's confidence score, the fraud score, when we amalgate everything and we orchestrate in a fashion wherein you give a lot of information to the credit team. So while, it's a business where credit will look at all the cases, it cannot be a digital journey. While it would be digital, there will be some touch of the credit, but however we ensure that the credit gets the complete PD of the customer along with complete information. So the credit has to now not worry on whether I am meeting the policy norm, whether I have analyzed the bank statement, everything is available. They have to do more of decision making. So I think that has helped. And also I should thank the entire ecosystem, that because of account aggregators, there has been a now very less difference between a bank underwriting and an NBFC underwriting. So we are able to take account aggregator, and not only at the time of onboarding, since it's a consent based system, we are also able to monitor those accounts subsequently. And I think that is also helping NBFC to go that one step ahead and start funding the micro enterprises as well as small enterprises.
Extremely well said in terms of, and I think we should give the credit to the regulator and the government, the way they have been thinking on this whole stack, right? Like the account aggregator, which is really helping in terms of the underwriters. Thanks for that. My next question back to you, Mr. Sanjay, that if we look at, while we are talking about the growth, and if we look at in terms of the penetration, right, we still find that only around 47% of the MSMEs who are registered on Udyam are actually having a formal credit, right? If we have to take the banks to the next, let's say 10 to 15% of these sectors, or the MSMEs who have not availed it, what are the things which you feel will make the difference in moving into the next 10 to 15% of the MSME segment?
Sure, thank you. See, taking back a leap from where I left in the previous question, okay, what you do today, what you sow today will help you reap tomorrow. Okay, so whatever we have seen the growth taking place is because of initiatives taken in the previous years. Okay, now what is happening is all the so-called medium to small enterprises are people who have been adequately funded by either a bank or an NBFC. While there are pockets of potential available, they are largely contained. What you are talking about, the 53%, is largely in the micro and nano space. So banks and NBFCs need to understand who these customers are, not wear the same hat as they wore when they underwrote and did business with the 47%. What is leading this charge into the newer segments is banks now going to informal microcredits, which typically did not have those long list of documents to give a bank or an NBFC. And today banks and NBFCs have come out with much truncated document list and largely taking them digital with limited amount of information from customers, and are able to underwrite such customers. And that is what is expanding the micro and nano segment. From the micro and nano customers, what is required is greater amount of discipline. Until now, they had not experienced any financing from anybody, so they could do what they felt like doing. Now, when you enter a world of organized finance, there are certain obligations you have to fulfill. As long as you understand that and are willing to fulfill it, there is enough scope for you to grow. In the 47% of people who are already included from financing, the pricing was a sensitive issue. For the 53% who are not yet there, pricing is not the sensitive issue. The lender needs to have is risk-based pricing to make an economic model work. For the future, telecom, utility data which is available in the system, if that is made available, at least the continuity and the veracity of the customer can be easily ascertained digitally without the need for all the other manual interventions that we typically do. One more item which will help significant move up is we require large tech players. We had very large tech players when private banks came into the system.
Yes.
So ledger banking became core banking. Today in the field of lending, you have mid-rungs and small-rung players. Sustainability of the tech platforms is a question mark, which eventually comes as reputational risk to a lender. A few of these things getting played out and being taken care of in the future will definitely lead to a significant growth from year two.
Thanks, Mr. Sanjay. And I think clearly, basically, the cohorts being made of these MSMEs will help in terms of taking it to the next level. Not everybody can be painted in the same way of underwriting, and that's clearly one way of growing that. Thank you for that insight. My next question back to you, Ms. Zeenat. If we look at the NBFC disbursements and the way the portfolio is built up, it's actually taken a lot in the what we call at deeper geographies, the true Bharat, if I can call it. Somewhere where maybe some of the traditional lenders are not present, right? In considering that, how do you see, is there some different risk management which you look at it in terms of NBFC as a whole when they are looking at these kind of geography? And in L&T Finance, in terms of is there any kind of a strategic shift which you are looking at in terms of serving these geographies?
So if you talk about reach, first is I think NBFCs are generally having a better reach in terms of their rural presence and their rural funding. So while banks have a lot of branches, so it's irony that banks have branches but the reach is better for NBFC to these customers. While L&T Finance, if you ask me, really under micro enterprise, we have achieved that reach, that we are on in those markets. We have reached in terms of be it unsecured loans, be it micro labs. But when it comes to SME business, we currently are at metro and semi-urban areas, but yes, we want to deeply penetrate, and that's the plan for next 3 years. Now it's very easy to say that we would expand, but then how do you expand and do a risk calibrated growth will be the question. So in order to ensure that we achieve a risk calibrated growth, the first thing was to put the complete house in order. So that is why SME Cyclops was first brought in, and there was a separate Cyclops for micro loans, where it is very, very small micro enterprises, and there is a separate Cyclops which is there for SME loans. So for SME loans, first we have tested, we've got 100% live, it is performing extremely well. The initial reads are very, very good as compared to what we used to do the underwriting, though this is an AI based underwriting engine. However, the basic principles of lending has never been compromised, so it's not a model based funding, it's a orchestration of model, the cash flow assessments and the bureau rules, etc., or the guardrails which have to be there, or the fraud checks which have to be there, those have not been compromised. So the first thing was to put a resilient underwriting engine in place. That has come in place. Now we have a confidence that now if you go to the rural markets, we would have a better customer sourcing. Again, once you source and underwrite, you have to collect it also. So how do you ensure that you put your collection structure also in place? It is very easy to go and go into the market, spread out, give loans to the customers, but end of the day, what happens if you are you have in so many places you have some 4455 customers, you won't be able to put a manpower in place. So how do you preempt those and how do you mitigate those risks is what is the strategies we are working on, wherein we are also strengthening that if we are going to lend, whatever is going to be the collection, how are we going to do that in the far reach areas and how are we going to address that concern. And third is we are also putting a monitoring system in place which is Nostradamus, which also will ensure that the way account aggregator is taken at the time of onboarding, consent based, we will take it for monitoring, then the payments data, then the geospatial data. So you ensure that it's not that you gave the money to MSME and you forget. When you give a loan to an MSME, the monitoring will be the key to ensure that the growth is risk calibrated.
Very well said, and like we keep saying that easy to lend, but it is only profitable when the last EMI comes in.
Yes.
So absolutely right on that. And also I fully agree on to the point that technology can be used, but the basic credit checks have to be done using the technology.
Yes.
Right. My last question to both of you, maybe I can have it with you first, is that if you look at, again, as per the report, that a lot of these good MSME who have taken loan and closed it, right, have eventually moved out of the formal credit system.
Yeah.
And when we look at it, we find that a lot of them are in the good, the CVCMR rank, maybe 1 to 3, and they are credit worthy, but they are not coming back and taking that loan. So, like on the consumer side, there's so much of done on life cycle management. How do you see the MSME part, right? The whole customer life cycle and engagement to be done.
Yeah.
And also, to both of you, Sanjay, to you as well, is that if we have to look at the next 2 to 3 years, right? What are those tools which will help further grow? It could be AI, it could be some different kind of scoring, it could be account aggregator, as you mentioned. But what are the tools which you see would really, in terms of help in enabling it and taking it to the next level?
So I would again go back to a few of the insights, which while speaking to the customer, I think that's the best way to analyze and MSME customers is to speak more and more to them. A few things which have come out very clearly in MSME customers is, once these customers get stabilized. So before that, one step before, NBFC has been instrumental in getting in NTC MSME customers. So NTC customers are where banks generally would not take an enhanced risk or would not want to deeply penetrate, and we've been seeing that NTC has been coming down. But as an NBFC, we prefer that we try, since we have so much of ecosystem data, that you are able to assess their income, you are able to penetrate that segment also. So I think NTC has started coming in the fold. So once they start taking funding, they become self-sufficient. What one change which I have seen is, they start getting credit from their suppliers. They start getting advances from their customers, because then they have built certain credibility. One reason which is I don't feel good about it is, the second generations are not joining the business. And which is what I spoke to a lot of customers, at least lot of successful customers. When you say CMR 1, 2, 3, probably have to be very good customers. So when I have been speaking to them, and when you go, you generally chat about what's the next future plans, etc. And the customers would have been saying that while I'm taking it ahead, what will I do further expansion, etc. Because none of my generation either wants to go abroad or wants to get into tech or wants to get into an employment, but doesn't want to join the traditional parents' business. I think that is one of the things which has obviously has probably, I feel that could be one of the reason of our exit of such good customers. But nevertheless, one more insight which I have seen is, when you give them pre-approved offers, they don't want to get into an hassle of again giving the documentation, etc. But when you show them that green channel, you do those pre-approvals, because you have lot of account aggregator data, etc., GST data, and when you orchestrate them, and when you give them some kind of pre-approved offer, that nudges them and that reminds them that they can go for a loan, it's easily available. Because somewhere MSMEs also have an impression of their earlier experience, wherein and they would have given some list of documents, post sanction, post disbursement also there's a lot of monitoring. They would be giving their stock statement, book debt statements. However, banks have also overcome all these hurdles now, at least up to 5 crores. If you see, I have seen majority of banks have overcome lot of these frictions, and they made it seamless. However, those impressions needs to go away, and once they know that these are pre-approved offers, or now the things have changed, now journeys are digital, I am sure they would come back. And also, obviously, pricing now becomes important for them. So for such customers, they're very price sensitive, because now they know they're getting money from the market. So unless and until you give them cheaper than the market, they would not want to do all this documentation.
Thank you, Zeenat. Hi, Sanjay. So,
if I were to add to what Zeenat was saying, we go back to the first principle. A MSME customer in India is extremely conservative and debt averse. The customers you are referring to typically are customers who have taken term loans for a particular purpose, and once that purpose is fulfilled, they don't seem to need any more money at that point of time. Okay? However, working capital is being infused from their own sources. that limits their growth.
Yeah.
Minute they start looking at banks for working capital, they will end up using up to a particular level to maintain business or grow their business and keep a buffer for opportunistic assets time and again. Next, to a customer who has been dealing with you, if you can size up some pre-approved offer for him saying, if you need to buy a photocopying machine or you need to buy a small instrument for your business, go ahead, buy it, give me the invoice and take the term loan. That is one thing which will help the customer continue and be sticky to you. Another thing you can look at to make banking frictionless is for customers who are on a checking account with you and have OD facilities or CC facilities, try and do their renewals or their enhancement digitally.
Yes.
It'll go a long way. And lastly, for customers who you cannot give loans to, give them financial literacy. How? Based on the documents they have submitted and which through your engine couldn't give him funding, tell him where was the gaps in his business. Counsel him so that he has time to correct it and over 6 months or 1 year come back to you or to some other financier, get the money and grow the economy.
Thank you, Sanjay. Clearly, in terms of, the perspective you have given on the banking side and Zeenat, what you have just shared on from the NBFC perspective. Thank you so much for, your insights. Clearly, I feel that, this is particular segment which has huge growth opportunity. It is, as you mentioned, Sanjay, that it's only a part of that has been served, and purely from geography or even the reach, there is so much more to be done. Needs to be done, of course, like Zeenat, you mentioned, that without compromising the risk part, right? Technology will play on a lot on this particular front, and the growth is humongous, which is available. And as we say that MSME remains the backbone of this country. And I think we all have to grow this in a very responsible manner, and we all have that responsibility to do that. That brings a closure to the MSME Sandesh, and I'm extremely thankful to Mr. Sanjay from HDFC Bank and Ms. Zeenat from L&T. Thank you so much for joining us.
Thanks.
Thank you, Ejaz, for having us.